NURSYAMIRA as Executive of Public Member Head. We are going to start this presentation with company background of Public Member Head. At the beginning, Public Bank was founded in 1966 by Tan Sri Datuk Sri Dr. Teh Hong Piao. On 6 August 1966, Public Bank started its business at its first branch, which was located at Jalan Gereja, Kuala Lumpur. With its vision as a bank for the people, Public Bank started providing banking services to ordinary people in Malaysia. On 6 April 1967, Public Bank was listed on the Kuala Lumpur Stock Exchange, now known as Bursa Malaysia Securities Berhad. Public Bank is the third largest banking group in Malaysia with total asset size of RM662.74 billion as at the end of 2021 and is the second largest company listed on Bursa Malaysia with total market capitalization of 80.75 billion. Public Bank has expanded its banking business in Malaysia and across the region, including Hong Kong, China, Cambodia, Vietnam, Laos and Sri Lanka. Today, the Public Bank Group has a wide network of 293 domestic branches and 150 overseas branches with a combined staff force of over 19,000 people. The group has expanded the banking business to include a comprehensive suite of financial products and services which comprise of personal banking, commercial banking, Islamic banking, investment banking, share broking, trustee services, nominee services, sale and management of unit trust fund, as well as bank assurance and general insurance products. To serve customers better, the group leverages on the advancements of technology and digital capabilities in line with the evolving needs of customers. Next is their vision and mission. Their vision is bank for people, while their mission is to sustain the position of being the most efficient, profitable and respected premier financial institution in Malaysia. I will now proceed our presentation with factors to consider having a segment reporting. Number 1 is nature of business of activities. An entity's business activity can be reported in a variety of ways in report. Other ways in reports are other factors, such as the nature of each component business activity, its existence of managers responsible for the activities who are responsible for them, and information presented to your board of directors may identify a single set of components as constituting an entity's operating segment if the chief operating decision maker, or as well as we call CODM, uses more than one set of segment information. The nature of business for Public Bank Berhad involves all parts of commercial bank and the provision of related financial services such as hire purchase, retail operation, corporate lending, investment banking, fund management, and others. Next, we have existence of managers responsible for the activities. Generally, every operating segment has a segment manager who is directly accountable to maintain regular contact with the chief operating decision maker or CODM to discuss operating activities financial results for classes or plans for the segment term. Segment manager identifies the function, not necessarily a manager with a specific title. The chief operating decision maker or CODM also may be the segment manager for some operating segment. A single manager may be the segment manager for more than one operating segment, being the managing director of Public Bank Berhad, and of those who are holding the title is responsible for monitoring each of the segment. Number 3, we have information presented to the BOD. The characteristic may apply two or more overlapping sets of components for which managers are held responsible. That structure is sometimes referred to as a matrix form of organization. For example, in some entities, some managers are responsible for different products and services line worldwide, whereas other managers are responsible for specific geographical area. Chief Operating Decision Maker or CODF regularly reviews the operating result of both sets of component, and financial information is available for both in order to gain improvement of the company's performance. Next, I will explain about type of segment. Islamic banking business is organized into the following key operating segment. The first one is hire purchase. Hire purchase operations focus on the provisions of passenger vehicle finances to all level of customers. The second one is retail operations. Retail operations focus on providing products and services to individual customers and small and medium enterprises. The product and services offered to the customers include credit facilities such as mortgage, trade and personal loan, credit cards, deposit collections, and investment products. The third one is corporate lending. The corporate lending segment caters to funding needs of large corporate customers, which are primarily public listed company and related corporations. The fourth one is the treasury and capital market operation segment, refers to the priority trading in treasury related products and services such as foreign exchange, money market operations, and securities trading. The investment banking segment focuses on the business needs of large corporate customers through the provisions of financial solutions and direct lending. The services offered include structured financing, corporate advisory services, mergers and acquisitions, stockbroking, and debt restructuring advisory services. The fund management segment is composed of the sale of trust unit and the management of unit trust fund as conducted by the bank wholly owned subsidiary company of the public mutual berhad. The other segment relates to the non-core operations such as property holding. The last one is the head office and funding center segment, manage the investment of funds from shareholders and capital securities, as well as provide support services to the business segment within the bank, as well serve as the funding centers. The group's office business operations are organized according to the following geographical locations. The first one is Hong Kong. This includes all the business operations conducted by the bank's subsidiary companies in Hong Kong and the public. The People's Republic of China, including retail and commercial banking and lending works management, services, stockbroking and other related financial services. The second one is Cambodia. This comprises all business operations conducted by the bank's subsidiary of companies in Cambodia, which includes mainly financing, deposit taking, general insurance business, and stock blocking. Other countries refers to the group's banking business operations in the Socialist Republic of Vietnam, Laos People's Democratic, and Sri Lanka.
Next, I will continue the presentation with the Chief of Decision Making and its responsibilities. The term of Chief Operating Decision Maker is identify a function, but not automatically a manager with a specific title. That function is to allocate resources and assess the performance of the operating segment of entities. Tan Sri Datuk Sri Dr. Tai Ahlek is the Managing Director or Chief Executive Officer of Public Bank. He is 79 years old and has 61 years experience in the banking and finance industry. He was appointed as an Executive Director of Public Bank on 18 June 1997 and was redesignated as Managing Director or Chief Executive Officer with effect from 1 July 2002. He joined the Public Bank Group as a pioneer staff in 1966 and was the Executive Vice President of Public Bank from 1995 to 1997. He is presently the Chairman of the Association of the Hire Purchase Company Malaysia and is a council member of the Association of Bank in Malaysia. His directorship in other public companies in the Public Bank Group include as Director of Public Investment Bank Berhad, Public Mutual Berhad, Public Islamic Bank Berhad, and Public Bank Hong Kong Ltd. The CODM responsibility is accountable for the effective management of the bank's day-to-day operation. Not only that, he also responsible for developing the business direction and strategy of the bank. Besides, he needs to ensure that the bank's business strategy and policy are effectively implemented.
Hi, my name is Nurul BINTI Muhammad HISAM. So let's continue with our presentation. To identify the reportable segment, each segment need to meet the requirements of 10% threshold test. There are three methods to calculate the 10% threshold test. The first one is revenue test, where the reported revenue combine the external and internal revenue is 10% or more of the total revenue. Next is profit test, where the absolute amount of segments report profit or loss is 10% or more. And the last one is asset test, where the segment asset is 10% or more than the total asset. So now we're gonna look into the segmental report by using the revenue method. We're gonna look at the domestic segment of the public bank berhad. To get the answer, we need to total up the external and internal revenue and divide it by the total revenue. For the hire purchase, retail operations, head office and funding center, and treasury and capital market operations are qualified for reportable segments. These four segments meet the requirements of the 10% threshold test. Now, for investment banking, fund management, others and corporate lending did not qualify for the reportable segment, as these four segments actually did not meet the requirements of 10% threshold test. So now we need to do the 75% threshold test, where all the reportable segments need to be at least 75% or more of the total external revenue of other segment. If it less than 75%, the company should add another segment even though it does not meet the requirements of 10% threshold test. As you can see here, public member had get 79.96% for the 75% threshold test, and therefore the company did not need to add another segment. Now, for the new segmental report, we could see that there are only 5 segments, which are hire purchase, retail operations, head office and funding center, treasury and capital market operations, and other segments. This is due to all the non-reportable segments. Now it's combined as other segments.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul binti ZAIDI from TAC220. My metric number is 2022-785989. Now, I will be presenting several advantages and disadvantages of segment reporting on how the information is used by public bank berhad. The advantages include separation of profitable segments. Transparency is one of the most important benefits. Public bank berhad has several categories of business operates. Segment reporting can disclose which areas are profitable and which areas that are drains on the bottom line. Thus, the company's management can take various steps and initiatives to maintain the segment's profitability while increasing the profit of the other segments. For example, the evaluation could prompt a change in strategic direction for the managers to make future decisions. Next, gives better understanding of the financial statement. Segment reporting enables public bank berhad shareholders to gain a better understanding of the variances that may affect overall numbers. For instance, the report showing where those the earnings coming from and can help shareholders to determine whether the earnings are sustainable or instead. Hence, this reporting is intended to assist the investor. According to the Annual Report 2021, it shows that our company integrity in corporate reporting and meaningful relationship with stakeholders by communicate with stakeholders where the group maintain a corporate website which provide relevant information to its stakeholders. Another advantage is lower cost of capital. The risk of investing in the stock of a firm that reveal all information is theoretically lower than the risk of investing in the stock of a company that withholds information. For example, when the company face financial risk problem, our company's cash position and liquidity as well as working capital requirements were closely monitored and assessed, and appropriate strategies were undertaken to address emerging liquidity pressures. However, there are certain disadvantages that need to be highlighted, which are data manipulation. The segmental reporting information can be manipulated as well as it may be reported through the view that the management want the users to see. For example, if the data is presented in a true management's eye style, segment reporting lends itself to the data manipulation. Therefore, the users of financial statement will get false idea of the performances of the company. The losses could be grouped with an unrelated profitable business. You need to paint a better picture of performance to deceive the board of directors. Another manipulation example is the manipulation data will give company leader more discretion as how to decide how segments are constructed and what metrics are published. For instance, the managers will manipulate and change the data of the companies in order to attract the shareholders and investors to invest into their company. The second disadvantage is place a strong emphasis on the present. Segment reporting can place too much of focus on short-term numbers. Company report their segment using short-term data and neglect the long-term figures, although knowing that this can give the long-term impact to their business. Last but not least, base of segmentation. The split of diversified organization for segment reporting purposes is the basic challenges that emerges in segment reporting. Segments can be created in a variety of ways depending on the segmentation base. It's also difficult to identify segmentation. Segmentation can be done based on organizational divisions, industries, markets, and products, among other things. Each has its own of limitations and issues.
Next, I will explain for the second part, which is interim report. Generally, the basis of preparation can be divided into two parts, which are integral method and discrete method. Integral method refers to a fraction of the annual report. Meanwhile, for the discrete method, it refers to a separate period and the reports will be prepared on a daily basis. Public bank berhad has used discrete method in their interim report and are also prepared quarterly, which is 3 months for the fourth quarter of the year. The basis of preparation for the public bank berhad is the unaudited condensed interim financial statements have been prepared in accordance with MFRS 134 interim financial issued by the Malaysian Accounting Standard Board for the third quarter and 9 months ended 30th September 2021 under the Historical Cost Convention, except for the following asset liability which are stated at fair value.
Public bank berhad has used these two accounting policy in preparing their interim report. First, investment property. What is investment property? Investment properties are properties which are held to earn rental income or for capital appreciation or both. Properties that are occupied by companies in the group for conduct of business operations are accounted for as owner-occupied rather than as investment properties upon consolidation. Public bank berhad has adopted the fair value method in measuring investment properties. Investment properties are measured initially at cost, including transaction costs. Subsequent to initial recognition, all properties are measured at fair value with any changes recognized in profit or loss. The fair values are based on the market values, being the estimated amount for which a property could be exchanged on the date of the valuation between a willing buyer and a willing seller in an arm's length transaction. Fair values of investment properties are determined either by independent professional valuers or by management based on their judgment and estimates. Management estimates have been made with reference to current prices in an active market for similar properties in the same location and condition and subject to similar lease and other contracts. Investment properties are recognized when either they have been disposed of or when the investment property is permanently withdrawn from use and no future economic benefit is expected from its disposal. Any gain or loss on the retirement or disposal of an investment property is recognized in the income statement. Next, intangible assets. Intangible assets acquired separately are measured at cost on initial recognition. The cost of intangible assets acquired in a business combination is their fair values as at the date of acquisition. Intangible assets are recognized only when the identifiability and economic benefit probability criterion are met. Following initial recognition, intangible assets are carried at cost less any accumulated amortization and any accumulated impairment losses. Intangible assets with an indefinite useful life are not amortized but are reviewed annually for impairment or more frequently if events or changes in circumstances indicate that the carrying value may be impaired. Intangible assets with an indefinite useful life is reviewed annually to determine whether the indefinite useful life assessment continues to be supportable. On the other hand, intangible assets with a finite useful life will be amortized on a straight line basis over the estimated useful life and assessed for impairment whenever there is an indication that the intangible asset may be impaired. The amortization period and amortization method for an intangible asset with a finite useful life are reviewed at least at each financial year end.
According to MFRS 134, which is entering the financial reporting, is a financial report for a period shorter than the full financial year. Entities can choose either to present a copy or condensed of financial statement. Interim financial report can be issued either semi-annually, quarterly or bi-monthly, but generally, it can be half-fully quarterly report. The report will cover the current period year to date and comparative period. Public member had issue condensed set of financial statement, which include condensed statement of profit or loss and other comprehensive income, condensed statement of financial position, condensed statement of changes in equity, condensed statement of cash flow, and selected explanatory notes.
Public Member Hide issued its interim report quarterly, which starts on 1st October 2021 until 31st December 2021. As for the interim statement of profit or loss and other comprehensive income for the fourth quarter and financial year ended 31st December 2021, the current interim period will be on the 1st October 2021 until 31st December 2021, while the comparative interim period will be comparable interim period of the preceding year, which was 1st October 2020 until 31st December 2020. For the first interim statement for financial position as at 31st December 2021, the current interim period will be at the end of 31st December 2021, while the comparative interim period will be at the end of preceding year 31st December 2020. For the interim statement of changes in equity for the financial year ended 31st December 2021, the current interim period will be on the 1st October 2021 until 31st December 2021, while the comparative interim period will be on the 1st October 2020 until 31st December 2020. Lastly, for the last interim statement of cash flow for the financial year ended 31st December 2021, it will be as the same as statement of changes in equity, which is the current interim period will be on the 1st October 2021 until 31st December 2021, while the comparative interim period will be on the 1st October 2020 until 31st December 2020.
Next, I will be presenting proposed adjustment and the effect before and after adjustments on the statement of financial position. First adjustment will be about the transfers of investment property to property, plant and equipment. On 1st January 2021, a building with a fair value of 1 million ringgit was transferred from investment property to owner occupied. There was a change in use of the building. So, the journal entry for the transaction will be debit property, plant and equipment amounting 1 million and credit investment property amounting 1 million. So, as we can see here, the amount of property, plant and equipment and investment property in the interim statement of financial position was 1,324,707 and 606,074. After adjustments have been made, the amount of property, plant and equipment is escalated to 1,325,707 as we debited the amount of transfers 1 million ringgit. As for investment property, the amount has decreased to 605,074 as we deduct the amount of transfers to 1 million ringgit. In accordance to MFRS 140 investment property, if there is a transfer from investment property to owner occupied, investment property treated as property, plant and equipment, MFRS 116 from the date of transfer, which is on the 1st January 2021. Property, plant and equipment will to measure at the investment property's fair value on the date of transfer, which is 1 million ringgit. The difference between the investment property carrying and fair values is accounted as the gain or loss in the statement of other comprehensive income.
Next, I will proceed with the adjustment 2. On 1st January 2018, the cost of plant and machinery of the public member height is 1.5 million ringgit and its accumulated depreciation as at the date is amounting 500 million ringgit. The company depreciates all its plant and machinery on a straight line basis at 50% per annum on a yearly basis. So, the journal entry for this transaction will be debit depreciation 900,000 ringgit and credit accumulated depreciation 900,000 ringgit. The calculation for the depreciation is we need to multiply the cost of plant and machinery with the 50% of depreciation rate and multiply with the 4 years, as it was stated that the cost of plant and the machinery was yearly year 2018. As we can see here, before the adjustment, the amount of property and equipment was 1,324,707,000 ringgit. And as you can see, after deducting the accumulated depreciation to the amount of property and equipment, the amount has decreased to 823,807 ringgit. That's all from us. We hope you understand all the explanation and enjoy the video. Thank you.